Yes. Okay, cool.
Okay.
All right. Greetings and welcome. We're thrilled to have you with us today as we kick off our third and fourth quarter webinar series for 2025, focused on real questions and real solutions for navigating the LA housing market. At the heart of today's conversation is a real simple truth. Affordability and good credit are key building blocks to acquiring wealth through real estate. We're honored to be joined today by Nathalie Kaplan, our trusted loan officer, celebrated for her transparency, personalized service, and deep expertise in TIC lending. That's Tenants in Common, a growing strategy in today's market. Also joining us is Steve White, founder of American Credit Repair, with over 20 years of experience and a team of more than 35 professionals. Steve has helped thousands of clients overcome credit challenges, given that an estimated 70 to 80% of Americans face credit issues. His insights are more timely than ever. Together with Nathalie and Steve, we at the Zane Widdes Group are here to offer clarity, strategy, and next steps, whether you're exploring TIC options or ready to take action on improving your credit. After all, the better your credit, the better your rate, and knowledge is power. So let's dive in. Good. First, our website is tictalkrealestate.com. That's TICTALK, realestate.com. I get asked a lot, what is a TIC? To a buyer, it's an opportunity to purchase a home for 15 to 20% lower than the cost of a condominium. And it can be rented. To an investor, it can be the new flip. Typically, you get more money than your ARV, after repair value, or value added. Income property owners, it's our answer to the ULA tax. And income property sales with rent control and restrictions. It's your exit plan. Tenants in common ownership are typically more common in affluent and upscale neighborhoods, appealing to those with higher income. Condoized, TICs versus condos. We actually do call it a condoization or condoized. Some TIC communities, we call them TIC communities. Some TIC communities decide to go condo later, increasing market value and appreciation. What are the pros of TICs? It's more like home ownership. It's a hybrid of a single-family resident and a condo. You make more decisions. More decisions are in your hands, not some board of retired people. I mean that lovingly. Selling and renting. HOAs, condominiums and HOAs come with CC&Rs. Everybody knows that stands for covenants, conditions, and restrictions. They're not restrictions on selling or renting unless the few homeowners decide so. And they're limited on what you can do there. We get asked about what's in a tenants in common agreement all the time. And we have a sample in our office. You can come in and review it, have a cup of coffee with us. That's the tenants in common agreement. It's about a 41-page agreement, and along with the declaration page. It's there to protect everyone. There's from describing your exclusive space and common uses to insurance reviews. And there's, as you're seeing on the screen, a lot of other bullet points or things that come into play and are handled inside that agreement. It's not like a 200 or 300 page homeowners association agreement. If you have any more questions about that, I'm up for questions now, or we can wait until after Nathalie's done, because some of the questions are interactive. Any questions now?
Zane, can you explain to me exactly what a tenants in common means?
Tenants in common, it means that it's a fractional ownership. In other words, no one can tell you what to do with your share, your specific. In the declaration, it's declared what your space is, what your private personal space is that nobody else can access. So what it means is it's multiple owners of the same building or property, because sometimes there could be multiple freestanding buildings, little cottages, could be anything. there's many tracts of tenants in commons that are massive houses, 6,000 square foot houses along golf courses. So it's not exclusively little or apartment conversions, or it's used for a lot of like resorts and resort areas. So it's your own personal space, personal property, and that you can sell it. You can sell it anytime without the approval of anybody else. So it's a common property, and it's your tenancy, your ownership, your protection. Does that help?
Oh, yes, thank you for that.
Excellent. All right. It's my pleasure to introduce Nathalie Kaplan. Nathalie is a results-driven professional with over 20 years of experience in the residential and commercial mortgage loan industry, with an emphasis on TICs, tenants in common purchase loans. With that said, here's Nathalie.
Hi, it's my pleasure to be here. My name is Nathalie Kaplan, obviously. I was doing TIC for a bank for a couple of years. So I've sold several loans in the Los Angeles area, anywhere from Brentwood, Los Feliz area, West Hollywood, and so forth. TSC loans are pretty much the same as any non-conforming loan in with the bank, but not many banks or many lenders do TSC loans because of their TSC agreement that it has to go through, and it's a little bit different than a condominium would be. As Zane said, it's a percentage instead of unit space. On a condominium, you will be owning apartment 1, 2, or 3. In TSC, you will own a percentage of the building, depending how many units it is. So it's divided that way, and it's recorded as a percentage. Most lender will probably give you a fractional loan, it's called. There is a group loan that is available as well, but it's not highly recommended because of that means that it's the entire building for 4, 6, 7 parties, and it's a little bit more complicated, and so lenders don't like to give group loan, but they will do fractional loan. And the rates pretty much, because it's only few lenders do it, it's a little bit different, probably a little bit higher. It's higher today than any other time. Hopefully it will go down in September a little bit, but like any other loans, it's a little bit higher, and they may charge a point. Also, there will be a higher processing fee, and there is a TSC agreement that needs to be reviewed, and even if the loan doesn't go through, it has to be paid. Typically, it's like around $600 in the Los Angeles area. Today's rate for TSC loan with 80% loan to value will be in the low 8s and high 7s. And if it's 85% loan to value, it will be a little bit more. Depending on talking about credit, there are some lenders that will give it at 720 FICO score and no lower, but if you find some other lender that may give it at 620, perhaps, if you are lucky. But like I said, not many lenders are offered to TSC loans. We don't have any FHA. It's not available. It's not available with VA loan, only at 15 or 20% down payment. It is available, however, with one lender that I know, maybe there is more of them out there, that will accept 24 bank statements, no CPA letter. So there is a way of working that out, as long as you have a good FICO score and you can provide income and so forth. Any questions for me about loans for TSC? I guess not. So
I got a question. What's the lowest FICO score someone could have to qualify for a TSC loan? Is there,
Yeah, I've seen lenders that is out of San Francisco that will look at 680, and there was a conversation I've had in the past for somebody that had 650. Typically they prefer obviously in the 720s. The only difference, the only good thing, like I said, is the instead of tax returns, they accept 24 months bank statement, which is very good for business owner or somebody that cannot provide tax returns as well. So it really depends on the lender. And since there's not many of them, your choice is not much. So if they have a 650 FICO score, maybe it's a good idea to come to you, Steve, and get it up to 720. It's well worth it. And it will give you a good rate as well.
thank you.
I have a question. As tenants in common sales becomes more common, especially in Southern California, in our area, because we're starting to see more sales simply because of the high prices in our area, do you think that interest rates will come down on the tick
Oh yeah,
loans,
yeah,
or
yeah.
as they become more popular and more?
Yeah, it's definitely. They really go, the lenders, they already have an approval to do TSC loans. So
Mm,
they already have that in place. That's not the issue so much if that lender is already taking TSC. It's really qualifying for the loan, and the down payment is not going to be any higher than uh, um, any lower than 15%. So that's the only difference. But it's pretty much competitive like any other loan. The FICO score will
yeah,
have to be higher. You have to make good income. And like I said, the good thing is instead of full doc loan of tax return, 2 years tax return, you can have 24 months bank statement and some other means of doing it, but really depend on the loan, the lender that provides the loan.
yeah. And now that we have the latest laws in the state of California that homeowners can sell off their ADUs separate from their homes, I would imagine it would have to be, if somebody were financing it, would have to be a, a tenants in common loan.
Yeah, that's something to be investigated.
I'm going to have
They
to
have
look
to,
at
yeah,
that.
they have to approve the property, of course, and go through the approval with the attorney to do the TSC agreement.
Yeah, that's true. Yeah,
Yeah, so it is possible. It really depending on the developer to make it a TSC.
yeah,
But it's a good way instead of owning a condominium, which is a little bit different. TSC is a good way to get your step in the door and buy a property.
yeah. Agreed. When entry level is close, approaching on a home, 1.5 to 1.75 million to be able to create an entry level home somewhere closer back to 1 million, which is so sad to say, that should help generate more sales and more appreciation. It's almost like stock splitting. That's funny. I never thought of that before. Um, all right. Thank you, Nathalie. Wonderful.
Welcome.
So I'm so appreciative. You are going to hear from Steve White today. I personally believe you should consult with a credit score expert at least twice a year. I have been advising our clients. I've been doing real estate for 37 years. I'm in my 37th year. And I've been advising my clients that they should consult with us twice a year. I called it a real estate checkup, like visiting your doctor or your dentist. I have found things over the years like loans that were supposed to be recorded against somebody else's property and showing up and people thinking nothing of it because it's simply a typo. What they don't know is by the law, if their neighbor defaulted on a property, then they're getting noticed, they're getting public records, and they got to call Steve. So there's you go. Better call Steve instead of
Better call
Saul.
Steve. A good
And
catch.
so huh?
I said that's a good catch line. I want to remember that. Better call.
Yes, right, totally. And so as we got to know Steve better and better, Steve is using the latest and most effective methods. Truly a credit guru. Steve, the floor is yours.
Thank you. I appreciate you having me. So I'm Steve White, and I started American Credit 22 years ago. Hard to believe it was 22 years, but my daughter was 2, and she's turning 25 now. So it's true, 22 years. Prior to that, I was a finance manager at a Cadillac dealership. So I started the company basically as a hobby on the side. I didn't think it would be a full-blown company after this many years, but at first my intention was just to send clients that wanted to get their credit fixed from the dealership to myself to help them with their credit. And I had one rep working for me at the time, and he was doing so well reaching out to mortgage offices in the town. And this was a little town in Northern California called Redding. So it was a small town up there. And he ended up getting so busy, I had to quit and jump over there to be there with him to help keep up. And I'll share a picture of our office in Los Angeles. Some of you might have seen us there. I don't know if it's showing up on your end. Do you see that? Is that showing up? Can you guys see it?
Oh, that's your LA? Yeah.
Yeah, that's our LA office. I don't know if you saw it there on Wilshire in Santa Monica. So we grew, we got to the point where we were pretty, pretty, pretty big for the Los Angeles area, pretty small when you take into consideration the whole country. But like Zane was mentioning, using the right approach to credit repair is the real trick to having success with credit repair. A lot of companies that are fixing your credit are just sending out what's called a dispute letter. And many of you have probably heard of disputing stuff. What a dispute letter is basically I don't know how to turn it off. Basically, when you write a dispute letter, that's you writing a letter to the credit bureaus, hoping the creditor doesn't respond and verify that account. And so it's such an old approach. It's been around for 40 years that most of the creditors on your credit are used to people using that approach to game the system. And so nowadays, if you want to really have success with credit repair, it takes a more aggressive approach to getting these items deleted. And so instead of writing a letter to the credit bureaus, which is something they're used to seeing, we actually go to each creditor and we threaten the creditor with a lawsuit on behalf of the borrower. So we go to the creditor, and on each negative item that's on that client's report, we're demanding the creditor provide documented proof of 3 things. So they have to prove the client had an account. They have to prove the negative action they reported really happened. And they have to prove they followed the law, the Fair Credit Reporting Act, back when they reported it. So if you missed a payment on your home loan, or you had a car you repoed, or a charged off credit card, all of that information has to be reported to the credit bureaus according to the law. And if it isn't reported correctly, or they don't verify it in the correct amount of time, which they get 45 days to do, the item has to be deleted by the credit bureaus. So what we do specifically is we send a copy of that law, the Fair Credit Reporting Act, from the client directly to the creditor, usually certified, so it goes to their legal department. And then we attach a screenshot of the portion of that law that tells the creditor what they have to pay the client for mistakes they report. And you can Google this, just Google FCRA violations, and you'll see the mistakes I'm talking about. But each time the creditor reports information to the credit bureaus and it doesn't match each bureau exactly, they trigger a fine that the creditor owes the client. And it's a pretty hefty fine. It's between $500 up to $5,000 per mistake. And an average account has somewhere between 5 and 10 mistakes on it. And so we're using those mistakes as leverage to get that creditor to delete the negative item they reported. So if you have a client or you have a late payment on your credit, let's say it happened last year, May. We go to that creditor, send them a 90-page packet from you. And in that packet is, like I said, a copy of the law, a screenshot of the portion of the law that tells them about that fine I mentioned. Then we screenshot your actual account and we highlight all the little mistakes we see they reported. And then we write them a letter. So we go to the creditor first and come at them with this threat of legal action. The letter says, look, I know what my rights are. Here's a copy of the law for proof. It says here you reported me late last May, last year. Prove I have an account with you. Prove I was late last year. More importantly, prove you followed this law and protected my rights when you reported it, or I can sue you. That's what I plan on doing. And then we say, by the way, here's some mistakes I see. Prove these aren't mistakes. And we highlight all the little mistakes we see. And we show the creditor that the client not only knows what their rights are, but they know what the creditor owes them for these little mistakes they reported. Once the creditor sees the client is a legal threat, someone that knows their rights, they take a step back. And not always, but most of the time, they don't verify the account with the bureaus. And not verifying the account with the bureaus causes the credit bureaus to have to delete the item. I don't know if I told you this last time we talked, but you can Google, if you guys are in front of your computer, I'm going to give you some keywords to search for. Search for Equifax 18.6 million.
You want my account number?
And Portland, Oregon. So I put those keywords in the chat. If you Google those 3 keywords, just copy, paste that in Google and then search, what you'll see is a court case that came up about 8 years ago where a lady had a $200 collection on her credit. And she wrote a letter to the credit bureaus like you're supposed to do. And TransUnion and Experian removed it immediately because it wasn't hers. It was a collection that wasn't hers. And Equifax didn't remove it. And she ended up going round and round with them for 2 years trying to get this removed. And she was trying to co-sign for her disabled brother so you can understand the story behind it. And the state Supreme Court of Oregon caught wind of this case and forced Equifax to pay her an $18.6 million settlement for not removing an account that wasn't verified as accurate. So that's what I'm getting at. So when the creditor doesn't verify the account with the bureaus have an obligation to delete that account. And if they don't, there's no limit to how much money you can get from the bureaus. You're limited to 5,000 up to 500 up to 5,000 per mistake with the creditor. But when it comes to the bureaus, there's no limit to how much you can get them to pay. So I like to spotlight that case because it really shows people how powerful the Fair Credit Reporting Act is and how the the credit bureaus don't want anything to do with an account on your credit that's not verified as accurate. So what we do, just to reiterate it again, is we go to the creditor first, threaten them with a lawsuit, and we're demanding they provide proof they reported this information correctly. And then if they don't respond to the bureaus have to delete it. So that threat of legal action is the key difference in our approach and most of the companies out there. And I like Zane recommended, I recommend clients give us a call or do a free credit analysis once every 6 months, once a year, just to keep an eye on your credit to make sure things haven't popped up that aren't yours that you might not be aware of. It's good to have credit monitoring in place. There's lots of places you can get your monitoring nowadays. Try to stay away from Credit Karma. Credit Karma is one that I recommend people against. Credit Karma sells your data to third parties for profit. And so a lot of people don't realize that because you're getting a free service and you think, oh, it's free, it's great. It's not as great as you think because it's an older version of your credit. It's not really accurate. And they're selling your data behind the scenes for profit. So you end up getting a lot of junk email or you might be getting a lot of sales calls. This is where you could be getting those calls from. A good service to monitor your credit. Identity IQ is one that we recommend. Smart Credit's another one. MyFICO.com, you've probably heard of them. LifeLock is a good way. And when it comes to protecting your credit, if you have really good credit, there's 2 ways to protect it. You can use what's called a fraud alert, which is something you could do directly through the bureaus. That puts a 90-day alert on your credit. So if you think your identity's been compromised, put a fraud alert on it. What that does is it alerts anybody that's pulling your credit to verify 2 forms of ID. So they won't just let somebody pull your credit without scrutinizing their ID, making sure that's really you. A more secure version of protecting it is using a security freeze. You can actually freeze your credit. Freezing your credit makes it so it's impossible to pull your credit. Even you couldn't pull your credit, which means if you went to a car lot today and forgot to unfreeze it, the car lot wouldn't be able to pull your credit until you unfroze it. That's the best way to protect it. So the freeze is the best way, but you got to remember to unfreeze it when you want to use it. And that's it. There's one more tip I'll share with you. It's a free one. It's called optoutprescreen.com. I'll put that in the chat too. .com. This is a free one I tell everybody about. Optoutprescreen.com is a way to take your name off of the list where creditors are looking at your credit right now. So every one of us should be opted out if you haven't done it yet. Because everybody is automatically default opted in. And when you're opted in, there's 2 things that happen. You're visible to all the creditors out there, so they're able to look at your full credit report without you knowing. Actually, the creditors you've had in the past. So anybody you've had credit with, anybody that's pulled your credit, if you're opted in, they can see your full credit report and they look every 2 to 3 months. It also stops the credit bureaus from selling your data to third parties. So similar to Credit Karma, how they sell your information, the credit bureaus also sell your information for profit. So they're just for-profit corporations, same as most companies like Credit Karma. They're just a for-profit corporation. And opting out takes away that access they have. So you go to that website, opt out pre-screen, and you want to select the 5-year option. And then you just put in your information and that opts you out for 5 years. You just got to remember to do it every 5 years. If you forget, the system will opt you back in and won't tell you.
Mm.
Any questions on credit?
Information. Anybody?
Mhm.
Yeah, I mean, I got a question. I was just gonna ask, as basic of a question might sound, like, how long would you say does it take to improve bad credit?
Good question. When we take a client on, we let them know it's going to take about 45, 50 days to start seeing results. So the initial round of investigation takes about 45 days. And then every round of investigation we do takes about 45 days. We do 4 of those. So if a client has 10 negative items, we're going to launch an investigation to all 10 of them. After that 45-day period, we should get 2 or 3 off. That's a realistic expectation. Another round gets another 1 or 2 more deleted. So each round is like swinging an axe at the tree. You're just trying to get more and more of the stuff removed. A good expectation is about half, maybe 60% of the stuff we go after. So if a client has 10 items, we should get 5 or 6 off. That's a realistic expectation. Anybody telling you, oh, I'm going to wipe it clean is just trying to get your money. It does happen, but it's really rare. I tell people usually about half. Some of them are going to verify the item's accurate. Some of them are going to respond in time. So realistically, about half. A good expectation score increase wise is about 100 points. So if you start out 600, we should be able to get you to around 700. Our record is 282. We've done it twice in 22 years.
Wow.
And the largest number of items we deleted 152 negative items for a lady. She had 176 to start with. It took 3 enrollments. She enrolled 3 times and it took a year and a half, but she wasn't even happy. I remember calling her. I was like, Maggie, did you see what we did for you? She goes, yeah, but you didn't get my AT&T bill off.
Maggie, not an explainer.
Wasn't, or at least her name wasn't Karen, but it was a $57 AT&T bill that she was just furious about because they kept calling her. And back then I didn't know about the rules. You can actually tell creditors that are harassing you to never call you again. So collection agencies, if they're harassing your clients or you can ask them to never call you again and only communicate with you in writing, and they have to honor that request, or you could sue them after that. So something to think about too, or tell your clients if they're getting harassed. This was about 10 years ago, so we didn't have that option back then, or I would have told her.
Wow, good information.
Yeah.
Now, I have a question. So I have an LLC, and
Mm-hmm.
I get at least 2 envelopes a week on commercial credit,
Yeah.
business credit. And like I have in my inbox, I probably have 2 or 3 unopened envelopes right now.
Mm-hmm.
What we hear it all about. You see there's a lot of pop-ups on the phone, a lot of
Mm-hmm.
pop-ups in social media. Get commercial credit now, get business credit now, and
Yeah.
yeah. What are your thoughts on that?
If you want to reduce the number of those junk email you're getting, opting out will help with that too. I should have mentioned that. So opting out not only takes your name off the list, but it stops a lot of those your approved letters you get, those letters you get, you'll see a lot less of those. As for business credit, I don't deal with business credit on this side, but there is a company that I do know I can recommend you to, or anybody that wants help with business credit. They'll help establish it and they'll help fix it too. So that's a whole separate, complete different animal, basically, so to speak, fixing business credit or setting it up. As far as I know, that they're very similar to what we do, but it's just a totally different, approach. I do have a gentleman I trust that does it though. The name of the company is Credit Suite, and they do business credit. He's the sales manager over there, and it's a nationwide firm also. So great,
All right.
great recommendation. And it's hard to find great recommendations in that or debt settlement. That's another one I have a good recommendation for, which is tough to find.
Thank you. Yeah, because I'm not trusting the ones that pop up on my screen.
Yeah, it's really hard.
Just because my Samsung hears me say it.
Yeah, it's true. Our phones are spying on us nowadays.
No question.
And I have another question, if you don't mind. What would be the most, while someone is partnering with you, doing what you do, that basically lawyer work, what would be the most effective ways for someone working with you to rebuild their credit on their end while you're doing, the things on
Good
your.
question. Yeah, good question. There's not a lot of building that we offer help with. I give advice mainly on that. We do recommend a couple different companies for secured credit cards. So adding a secured credit card basically adds like another credit card account to your credit. So if your scores are so low you can't qualify for a regular Visa, you can get a Visa card through these other alternative approaches, and think of them as sort of a stepping stone to getting back to the regular Visas. So a secured card adds another positive account to your credit. And then as long as you're using that account properly, meaning not missing any payments, keeping your balance under 30% of the limit, and then keeping a balance. You want to keep a balance on your card or at least use it every month. Some people will get these cards and then throw them in an old purse or an old wallet and not use them. Not using your card over time can actually work against you. So, if you have a new late payment hit your credit, that's going to do a lot of damage. But in a year, that late payment's not doing as much damage, it's diminished. Well, the same is true for positive credit. If you're using your credit all the time and keeping your balance low and making your payment on time, there's a positive impact to your credit score. If you pay that card off and then let it sit dormant for 6, 7 months or even a year, the positive impact is diminished. So it diminishes over time. So it's good to keep a balance on your card, keep the minimum payments made on time, set up your auto payments to make the payment on time every month so it's just paid right when the bill is due. And then another way is you can have someone that has a credit card that they've had established credit. They can add you to their card as an authorized user. That also boosts your credit because it transfers their entire history to your credit. So getting a mix of those is good. Maybe an authorized user card or two, parents, friends, girlfriend, wife. And as long as those accounts are in good standing, you don't want them to add you to a card that's maxed out or has late payments because that's going to transfer.
That's the girlfriend.
Yeah.
Yeah.
That's the girlfriend.
That's another trick. Make sure that account is good.
Great advice. No, that's great advice.
Awesome.
Mhm.
All right, all right. Anybody else have any questions for this evening? All right. Wonderful. Well, thank you, everybody. Now, Chi, you had a survey, so you're going to send everybody an email
Yes.
with a survey request, and that'll also enter you into a drawing for a Amazon card.
Yeah. Hold
Okay.
on, please.
Um,
I'm trying
with
to-
that said, thank you, everybody.
Oh,
Yeah.
Zane, hold on. I need to show the QR code. So hold on, please.
Oh, okay.
Sorry.
Or we can send it to.
Okay, yeah, I can
Send
send it by
email
email.
to
Yeah,
everybody.
exactly.
Okay.
Yeah.
Okay.
Good.
Yes.
All right. Well done. Thank you.
Thank you.
And we'll see you in the next one.
See you then.
See
Take
you
care.
then.
Thank you,
Thank you.
Steve.
Thank you.
You
Bye.
can go to bed now.
Looking forward to
Go in there.
it.
Bye, you guys.
Bye.
Bye.
Thank you so much.
Thank you.
Poor thing. It's like, what is